Malaysia maintains a substantial stock of official foreign exchange reserves through its central bank, Bank Negara Malaysia, BNM. As of early 2025, BNM's international reserves stand at roughly $117 to $119 billion, marking the highest level in nearly a decade. For instance, at the end of March 2025, the official reserve assets were reported at $117.5 billion. This is a significant accumulation. By September 2024, reserves had reached $119.7 billion, the most since late 2014. These reserves serve as a critical financial buffer for the country, used to stabilize the currency, the ringgit, meet external obligations, and instill confidence among investors. These foreign reserves are held in various forms. That could be foreign currency assets like the US dollar, the euro, or the Japanese yen. It could also be gold, which is historically known to hold its value. Then there's also special drawing rights, SDRs, and reserve positions at the International Monetary Fund, IMF. The bulk of Malaysia's foreign reserves, however, at 85% is in convertible foreign currencies, cash or securities. At end September 2024, for example, out of $119.7 billion in reserves, about $106.8 billion were foreign currency assets, such as foreign government bonds and bank deposits. The central bank also holds a modest amount of gold, valued at about $3.3 billion, approximately 38.9 tons, as of late 2024. This gold stock has in fact risen slightly in recent years, up from about 36.4 tons in 2018 to 38.88 tons by 2023. But it remains a small share of reserves, approximately 2 to 3% by value. Another component is IMF assets. Malaysia's reserve position at the IMF was around $1.3 billion in late 2024, and the country's holdings of SDRs, the IMF's international reserve asset, were about $5.9 billion at that time. Malaysia received a sizable allocation of SDRs in 2021, roughly SDR 3.5 billion, equal to about 4.8 to 5.0 billion, boosting its SDR holdings. The remaining category BNM reports is Other Reserve Assets, around 2.4 billion, which can include minor foreign currency assets not included elsewhere. But there is a particularly interesting facet of Malaysia's foreign reserves, and that is their holdings of US debt. Indeed, Malaysia, just like many major economies out there, buys and holds US debt. Specifically, US Treasury bonds and bills. This is a given, since holding US government debt is a common practice for central banks worldwide, and Malaysia is no exception. The US Treasury market is the world's deepest and most liquid bond market, and US government securities are viewed as essentially risk-free dollar assets, making them ideal for reserve managers who prioritize capital preservation and liquidity. How much US debt does Malaysia hold? While BNM does not publish a breakdown of reserves by country of issuance, data collected by the US Department of the Treasury and other sources give a picture of Malaysia's US debt holdings. According to the US Treasury's Treasury International Capital, TIC, reporting, as of mid-2023, Malaysian entities, official plus private, held roughly $12 billion in US Treasury securities. This would include Treasury bonds and notes, long-term US government debt held by Malaysia. In addition, Malaysian holders owned about $17 billion in US agency debt, primarily bonds issued or guaranteed by US federal agencies such as mortgage-backed securities from Fannie Mae and Freddie Mac. These agency securities carry implicit US government backing and slightly higher yields, and it appears Malaysia, like some other Asian reserve managers, has invested a notable sum in them. Apart from treasuries and agencies, Malaysia had a smaller exposure, around $3 billion, to US corporate bonds. All told, Malaysia's total holdings of US debt securities, treasuries plus agencies plus corporate, were about $32 billion in mid-2023. This isn't really a substantial amount of money, right? When we compare Malaysia side by side with other Southeast Asian economies on their holdings of US treasuries, we get to see that they hold more than Indonesia, but hold far less than other economies like Vietnam, Thailand, and the Philippines, and much less as compared to Singapore. It is also worth noting that Malaysian investors also hold US equities, stocks, around $34 billion worth as of 2023. But those are mostly held by institutional investors and funds, like Khazanah or pension funds, not by BNM as reserves. So, does this mean that Malaysia isn't interested in buying and holding US debt? Well, the answer actually lies in the fact that Malaysia does hold a significant amount of US debt, and it only seems small because they don't really have a lot of foreign reserves. In fact, if we assume that BNM holds a significant portion of the roughly $32 billion in US debt holdings, which we can roughly say may be around $10 to $15 billion in US treasuries, then it would represent roughly 9 to 13% of its total reserves. That is no small figure, as it means Malaysia's reserves are stored heavily into US debt alone. Comparatively, however, some neighboring countries allocate even larger shares to treasuries. Singapore, for example, holds well over 30% of its official reserves in US treasuries, though its overall reserves are much larger. So, why does Malaysia hold US debt? Well, the motivations are rooted in safety, liquidity, and stability. US Treasury securities are the most liquid financial assets in the world. In a crisis or urgent situation, BNM can sell treasuries quickly with minimal price impact, raising US dollars to defend the ringgit or pay external obligations. Then there's also the fact that US government debt is backed by the full faith and credit of the United States, which, despite occasional political drama over debt ceilings, has never defaulted on its obligations. Treasuries carry essentially zero default risk in the eyes of central banks and are considered a risk-free benchmark. Holding US debt thus preserves capital, a top priority for reserves. Another important factor is that although US Treasury yields have been relatively low for much of the past decade, they offer a positive return with minimal risk. In recent years, as the US Federal Reserve raised interest rates, especially 2022 to 2023, yields on US Treasuries climbed to multi-year highs, making them more attractive. For example, a 10-year US Treasury might yield in the range of 3 to 4% in 2023 to 2024, which is a decent safe return. If the BNM were to hold around $10 to $15 billion in US Treasuries, it may generate anywhere between $300 million to $600 million annually in interest income, depending on the maturity and yield of the securities. That's a meaningful contribution, especially for a central bank whose mandate includes not just currency stability, but also prudent financial management. Finally, US debt is essential for Malaysia. Also, because of the fact that the United States is one of Malaysia's major trading partners and a significant player in global markets. International commodities, palm oil, LNG, etc., are priced in dollars, and Malaysia's own exports, electronics, oil and gas, etc., often generate dollar receipts. Holding US dollar debt instruments helps facilitate trade payments and stabilize the ringgit's value against the dollar. In short, Malaysia holds US debt because it is prudent to do so. US Treasuries are essentially a cornerstone of the international reserves due to their unrivaled liquidity and safety. BNM can sleep soundly knowing that its US Treasury assets will be readily available and will retain value even in volatile times. This was evident during crises like 2020's pandemic shock, when central banks tapped their US assets to stabilize markets, or during the Asian financial crisis, 1997 to 98, when countries with larger dollar reserves fared better in defending their currencies. To answer the question directly, yes, Malaysia via Bank Negara. Malaysia and institutions like Khazanah does buy and hold US debt, significantly so. BNM holds on the order of $10 to $15 billion in US Treasury securities and additional US agency securities, forming a vital part of its $117 billion reserves. But anyway, do let us know what you think. Thanks for watching.